Another one bites the dust. The fledgling hedge fund industry claiming another victim. It's Whitney Tilson, and he is of Case Capital Management. A big, famous guy, especially in the value investing Warren Buffett crowd. The hedge fund manager shuttering the door to his firm due to massive underperformance. Are hedge funds officially becoming a thing of the past? That is totally hyperbolic.
Listen, this is a story that's evolving because they're increasingly becoming a thing of the past. We should point out that hedge funds haven't done very well this year again. After fees. I mean, they are up, marginally? Guess what? The S&P is up, and you don't pay any fees on an index fund.
Exactly.
Something like 12%. I mean, this is
climbing, by the way. We're very close, if not at an all-time record right now.
I mean, this is a no-brainer that you don't put your money in hedge funds right now. And the real question is whether this is a momentary gap or that they have to get momentary. We're talking about 2 or 3 years here, but whether after these rough couple of years, the hedge fund business is going to come back, or whether this is existential and they're done. I'll get into that in a minute, but just go through a couple of headlines here. Hedge fund closures in 2016 equaled 1,057. This year we're about at the halfway mark. This year is about 6 months in.
How many are there? 500.
500.
No,
plus
500,000.
500. 1,000 last year, 500 this year, so far. Okay, so you're talking about
total. How many hedge funds?
It's something like 5,000 or 6,000. Yeah, I mean, it's all. So, by the way, that's a big chunk of hedge funds.
Yes,
so you're talking about 20%. I mean, that's big. Some of the big hedge funds that closed down. Whitney Tilson, he's a name, and he's actually a decent investor. Remember, he's the one that made the lumber liquidators call very early.
Yeah.
He's very close with Buffett, so that's what gives him his cachet. But that's a smallish hedge fund. One of the big hedge funds were like Perry Capital. Billions of dollars. Chesapeake Partners, billions of dollars. We're talking about major hedge funds that closed down in 2016, and more will likely close this year. I mean, 500 is not done yet. That's a rolling number. And again, one bright spot, I would say, Steve Cohen expects to reopen his hedge fund.
SAP.
SAC.
I'm sorry, SAC.
But it'll be something else. I think it's going to be Third Point Management, whatever he calls it now, will be likely to open in 2018. But he's an outlier. Here's the thing, Liz. The question is whether this is existential or whether it's bad. And I will say this. The average investor out there can actually get to hedge funds. Like the average rich person had a hard time getting into Perry Capital, right? But they had a way of getting in through so-called fund of funds. Okay, like a Skybridge Capital, which Anthony Scaramucci built into a pretty decent business. Entrust is another one. There's a few of them. The real question is, for you, the average viewer who watches us, should you be trying to get into these investments? The sales pitch on this hedge fund side will be as interest rates go up, there's going to be more volatility. You're going to need us because we're going to manage our way through the volatility, and we'll be a hedge against the markets going down. The other side is, well, we've been hearing that argument for 3 years now, and it's not happening. And if you can hedge on your own, you buy an S&P 500 fund, you can put some money in a bond fund. You can, when you see interest rates go up, you could start, figuring out which sectors of the market. You can do this yourself if you watch Fox Business. And that's where this thing gets a little more complicated, and where you think, because of the fee structure on these hedge funds and because, investing, let's be clear here. This isn't rocket science. It doesn't mean you don't have to study. You just have to listen.
Also, just point out a very simple thing. People don't want to pay the fees anymore. Hedge funds, for those of you who don't know, do a so-called 2 and 20.
Right.
2% of the overall kitty and 20% of the profits.
And let's be clear, for our viewers,
that's what they take in salary.
Some of our
viewers
are rich guys, really rich guys that can get into a hedge fund. Some of our viewers are averagely rich guys, people like you, averagely rich gals, who have brokers.
I've been knocking on the door of hedge funds. Let me in.
No, but you have brokers, and you can get in a hedge fund through these fund of funds. The question is, when your broker sells you that choice, do you bite? And I am telling you, I'm not going to tell you what. I'm going to tell you the two arguments. The argument on one side is when there's volatility and downside risk, you put your money in because they'll beat the market. The other side is that they haven't been beating markets even on the downside lately. And guess what? You can plan for your downside risk cheaper through index funds and other measures. So there you go. It's up to you. I'm just telling you. But this is a big story for investors right now.
Thank you for bringing it to us.
Okay.
Charlie Gasparino.